Hello, ladies and gentlemen. Welcome to the Forex Cash Machine Market Outlook for the week of February 9th, 2020. My name is Greg McLeod. I'm the head trader and CEO of the Elite Traders University and the Forex Cash Machine. And it's great to have you with me today. And we're going to look at the markets. We're going to analyze them and lay out a game plan that we can use for the coming week. Okay, so without further ado, let's go ahead and get started. Before we get started, I want to really direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And we'll go ahead and resize that so you can be able to see that. Okay, cool. All right, and then a little bit about myself. My name's Greg McLeod, and I'm the founder and CEO of the Elite Traders University. And I'm a 23-year trading veteran. I traded forex, stocks, crypto. If it has a chart, I have traded it. I'm one of the foremost authorities on short-term day trading and scalping. It's been 8 years as a currency analyst at one of the world's largest forex broker-dealers in the world. And I've also spent 16 years in public education. I have a lifetime teaching credential from the state of California. And I've worked at a prop trading desk and a large top-tier bank. So I'm a published author, and I publish articles and also have mentored and taught people from all around the world. Thousands of people have gone through courses which I have taught over my 23-year career. And so I'm uniquely qualified to be able to mentor you if you ever need help. But without further ado, let's go ahead and move farther along and start looking at the markets and see how they're panning out. Okay, we're actually going to go to let's go to one of the most powerful tools I like using is my market heat map. My market heat map is an arrangement of currency pairs by percentage change, but it's not just that. It's also a lot of different things. It is the market heat maps, which allows me to see what's popping in the market. Well, the market's currently, it's Saturday evening and the markets are closed. So the heat maps won't be much use for us today, right now, but there's a trader's toolbox with a number of powerful analytical tools which we can use to analyze the markets, okay, including charts, volatility indicators, sentiment indicators, all these things that we can use for our analysis, preparing for the week ahead. And also, if you're just brand new to trading, no worries. There's also top-tier education brought to you by Elite Traders University to help you on your way wherever you are, beginner or advanced. There are courses available to you through my market heat map, almost $9,700 worth of bonuses. Okay, so let's get to it. So let's go to Trader Tools, and what we're going to do is start with the charts. Okay, go to the charts. We'll click that, and we'll get right into our charts. And I'm going to resize this a little bit so we can see our charts. Okay, so let me go ahead and do that. Okay, and there we go. And we're going to get rid of something I don't use is this. Okay, so we have our charts. This is the euro. What we're going to do is we're going to walk through the majors and also the indices, also gold, silver, and oil really quickly, and get a roadmap for the market. Now, I usually start my analysis off with the DXY, which is the dollar index. Now, the dollar index is a basket of currencies versus the US dollar, and we can use US dollar or the DXY. And now this is a very powerful chart of what we're looking at. We're looking at a daily of the US dollar index. And this US dollar index, we can see that we're clearly trading above the 50 EMA. And you can see higher swing highs and higher swing lows. I mean, just parabolic. You know, we've got, stacking candles, after putting in our lows back on December 30th. We put in a low down here about the 121.78 area. But what we have here is an inverted head and shoulders that we can clearly see developing here, which is extremely bullish and, makes us, the strength of the U.S. dollar. We have very good non-farm payroll numbers, which we'll discuss later on. But we have this kind of inverted head and shoulders going on right now, right here. We have our clearly defined left shoulder, the head with this spike down to this low, and then we have this little bit of a shoulder right there. Okay, so we have this right shoulder, and then we have our neckline that was established. If we can connect these swing highs there, so we've got some type of a neck, kind of a neckline, kind of a sloppy neckline right there, right? So we have our neckline, and what we can do is when we have this head and shoulders pattern, it's a powerful pattern, okay? So what we can do is we can take a measuring objective. We can take a line from the tip of the head. It's an inverted head and shoulders, okay? And we can actually clone this line like a sheep, right? We can right-click that. Okay, and I don't think we have our duplication tools. Okay, but we have this right here. We can extend this from the breakout point and actually get a projection target for how far this will possibly move. And so we're looking at 125.33 for this possible move higher. Okay, so that means that the U.S. dollar is super strong. And you look at it, we have negative interest rates in Switzerland and Japan. We have 0 interest rates in Europe. Germany is slowing down. You have China with the coronavirus, novel coronavirus that has killed almost 800 people, and that can impact global growth. And so basically, the strongest, the cleanest shirt in this dirty clothes basket is the U.S. dollar. Okay, so the U.S. dollar is climbing on some. Plus, we got some good solid economics. We've got, the unemployment rate, the lowest as it's ever been in several years. We also have, non-farm payroll, 225,000 jobs created. Very strong for the U.S. dollar. The American consumer is alive and kicking, and so this is reflective in the strength of the economy is reflected in the value of its currency, right? The currency reflects this strength. So consequently, when we look at the other major currency pairs, euro dollar, pound dollar, New Zealand dollar, we're going to see what these look like. We're going to get by looking at the U.S. dollar, we're able to understand what the other 7 majors are going to be going. Okay, so here is our. So I'm looking at the 25.33 U.S. dollar. A lot of people don't trade the U.S. dollar index, right? So what we can do is let's look at the euro versus the U.S. dollar, and the euro that's considered the anti-dollar. Okay, so if the dollar is going up, we look at the euro heading down. Okay. And I'm sure we'll see a lot of other currencies like the Aussie dollar and other that's totally blowing out support. I mean, just like total free fall here, breaking this round number 1.100 area, breaking. I mean, we had support in a couple of areas, and any euro bulls. I mean, it's hard to be bullish this currency when they have a 0% interest rate. Interest rates are the prime drivers of currencies, and do you want to put your money in a bank giving you 0%? I mean, basically it's negative interest rates because they're going to charge you fees for checking, maybe even coming into the branch, or the service fees. So really it's a negative interest rate already. But we had 3 levels of support, maybe even a 4th here. We tagged and rose up, but it just couldn't get past this upper bound of resistance that we saw in this area here. This is the 1.12387 area. So what we're looking at, we've got this topping pattern here where we're making lower swing lows, lower swing highs, and we just made a new lower low. We can just back this out a little bit. This is our daily chart. I'm looking for a first target. I'm looking at shorting this pair on any rebound back, because sometimes price comes back to return to the scene of the crime. Okay, that's the kind of the nature of price and that's what I teach my students in my mentorship, my Elite Traders University mentorship, where we teach the Forex cash machine method. And we can see that we might get a little bit of a rebound, manic Monday, maybe a little bit of a rebound, and then we'll probably see a collapse of the euro down to the 1.0883 area. And if you saw my previous video, I told you about dollar strength. The dollar is super, super strong, and so we're seeing this complete collapse. We're seeing a complete collapse in the euro coming up, going into the rest of February. Okay, so this would be a very tremendous trade. If we get any type of rebound to the 1.0990 area, we're looking at shorting that, and then looking for a test of 10832, 1.08832, and actually I'm looking for big free fall. I mean, like continuation. I mean, we're basically continue this downward move. It's going to continue in line with dollar strength, because this is the anti-dollar. So, we're maybe looking at then like the 103, 1.0359 area, really, because this was our kind of our support double bottom here. This is like, yeah, this is going to go higher, yay, and it bounced. Okay, got our bounce, and then it rose, and then this is like make or break here. If this doesn't take off from here, then we've got a lot of space to fall, right? And we can actually look at how this would set up on a risk reward. The risk reward on this looks pretty good if we get a nice little rebound there on how this would work. In fact, we can use the tool here, and we can do our short position. Let's say we got short, maybe 109.75. Maybe we look for a stop right around the this 1.10597 area, looking for a move down here for maybe like a one point let's see, can't even see that, 1.01 to 1, it's like 1 to 1, but then I think we go a lot farther, right? Once we bounce and continue to drop, we can trail or stop. Okay, anyway, let's go ahead and continue with the pound versus US dollar, GBP, USD. And we're going to see, this is going to be kind of boring. It's kind of like, okay, here we go. Here is our daily chart. We can look at some more data here, and you can see how we rallied high to this a long time. This is like 2018, right? 2019, 1.4412, a long time ago, right? And then we plummeted down, lower swing highs, lower swing lows. We made a bottom here, tried to defend it, right? 1.19528. Now, this looks like inverted head and shoulders as well. We have a lot of UK news coming up, and so we might want to take a look at the economic calendar on this. Lots of data coming out, and let's go ahead and go to our let's go to our trader tools, and if we can go a little bit, can I move this a little bit? Can we see what's going on? Yeah, we can go to our trader tools, and in our trader tools there's an economic calendar. So we're going to click the economic calendar, and that way we can kind of like, and I usually like doing that first, really. All right, so we got a lot of Chinese data coming up, okay, and let's take. I'm kind of going out of order here, out of sequence, and so just indulge me, because it's going to help you guys a lot, okay? Because on February 9th, which is tomorrow, we have consumer price index out of China, producer price index out of China, a lot of Chinese data, and you got to figure, guys, if coronavirus, hitting, and picking up momentum, that's going to impact Chinese growth, okay? Anybody say, well, Greg, I don't trade the Chinese yuan or renminbi. I don't trade those currencies. I was like, dude, yes, you can. The Australian dollar, New Zealand dollar, if you look at a map of China, all right? And if we were to look at look there, right? And okay, so Now we're going to zoom in on this. There's China, right? And if you go down just a little bit farther, oh, look what we got here. It's Australia. Do you think these two guys do a lot of trading right here? These, Australia and China. Yeah, they're gonna trade a whole. Oh, you can't see that, right? Let me move this over a little bit, right? Okay. These guys trade a lot, right? If these guys are sick, they're probably not going to be buying the raw materials. Australia supplies raw materials to China. They supply iron ore. They supply copper. That's why copper prices are like dropping because there's demand for these raw materials is going to negatively impact Australia, and so when we get this Chinese data that confirms this, that's going to impact the Australian dollar. And look over here, and move over here a little bit, and New Zealand, right? So these are two currencies in this area which will be impacted. I wouldn't look at the yen so much, even though in fact the yen might strengthen on this for other reasons, not based on trade or economic data, just a kind of a fear trade where people kind of like move their money into the yen, they unwind their riskier positions and buy yen during this time. So we could see rally is in yen, maybe drop in euro yen, drop in pound yen and Aussie yen, especially if this Chinese data comes up negative, right? Now we never know what the Chinese will say. Well, they're going to be fourth, because it's about saving face, and they might not say, "Hey, everything's okay over here. We're kicking in at 7% growth," right? But and then it's like, will the market actually believe what they're actually saying? And if so, we can position ourselves with, we can take a look at what's going on in the Aussie dollar and look what's going on in the New Zealand dollar, because those could be really good short candidates. But let's go ahead and go to the charts, okay? So, and actually look at AUD USD, all right? Now, where are we going to have the dollar being extremely strong anyway? And I'm going to have to zoom out to like a weekly chart. And we can see that this baby is like flatlining. We have like a pattern called a descending triangle. There's the ascending triangle, descending triangle. This is where, you got buyers trying to push up, but then prices keeps coming down. We're trading below the 50 EMA. And if we can zoom out a little bit farther, we're probably might retest that we're at currently trading 0.6717, right? We're probably going to see price drop down to this 0.6068 area right there, okay? So we're probably going to see prices drop down there, okay? And so that's going to look pretty bearish here, right? So this is what we're looking at, and we can zoom in on that. And this is a weekly chart, but we are sitting on support, but it's like thin ice down here, guys, real thin ice. So this, walking on this thin ice. Hey, this could bottom. I mean, considering how the global what's going on, fires in Australia, Chinese coronavirus, we're below the 50 moving average on the weekly. We look down to a daily, maybe we get another. I mean, this baby just trying to get up and it can't, and it's we're below. So we would see if we see a break, a closing candle below this support, lots of support. See, it's tried to penetrate repeatedly. It's like, please. It kicks off a little bit, comes back down, comes back up, higher low. This was the bull's last best chance, right? This new rally, new highs, higher highs, right? Right, and then we've got an accelerated, move higher, right? With the trade agreement, right? We have this, spiking, but we're spiking a whole round number resistance, bankers resistance, right? I told you guys about that. There's your round number resistance area We smacked that, and now lower swing high, lower swing lows. We're in a downtrend. We formed a downtrend channel. Downtrend channel. Say downtrend channel 5 times fast. Downtrend channel, downtrend channel, downtrend channel, downtrend channel. Okay, anyway. All right. Yeah. So, we've got this. And maybe it, comes up for air like Shamu, like the killer whale, come up, grab some air, and then this dive and continue to dive. And if we break that, it's like no air. I mean, there's nothing down here. Where is the last level of support? Whoa, we got to go back like to a weekly to even find any support here. Oh dear. Oh, okay. There we go. I'm like going, where? Oh, whoa, well, there we go. 60, 61. There is some minor support here. Minor weekly support. Like week support. Like week 62, 73. Anyway, that's like 400 pips away. I mean, this is like an air gap. Once this thing hits it, poof, we can see a gap straight down, right? And it can accelerate. I mean, when this thing bounced up, it bounced up pretty hard. But, this big wide bar can get filled with red bars on the other side because price seeks symmetry. And so there you go. There is some support in there. Anyway, we're looking at 100, 200 pips, to the downside. So it's like sell, and this is where we were in this range for a while. Now we broke some serious support here. And the New Zealand dollar, we're probably going to see something similar when China catches a cold. Literally, the Australian New Zealand economy catches pneumonia, right? And you can see that this was our double bottom, very bullish pattern. Oh yes, we took off, but then we made a lower high here. This high of January 20th was a lower high than the one on July 15th, and that confirms the downtrend is intact, and the bears are winning, the bulls are losing, and so we've got this trend line. But we have yeah, this is gonna be kind of fudging this one. I'm gonna take this high. Okay. So basically, we've got these converging trend lines, bearish, and we're looking for price to continue to move down on the weekly. Hourly chart, we can see that we might come up for air, right? I mean, we're way oversold, but that doesn't mean anything. Okay, with that's my alarm to keep going, right? All right. So we looked at the Aussie and Kiwi, going to be again, if you look at the economic calendar here at My Market Heat Map, we can see that we have this lots of Chinese data. So this move down can happen within the next 48 hours. Okay. So this is something, if you're watching this video, make sure you give me a comment and say, hey, Greg, this is great, or no, Greg, you're off the mark here, but encourage me. Let me know that you like what's going on, and we'll continue with our analysis. Let's go down to keep going on the charts. Let's go USDCAD, and and we can see higher swing highs and higher swing lows. This thing is a monster. It's going higher, and we can see a nice trend line on the 4-hour chart. Maybe get a little bit of a pullback. Maybe we come down a little bit to the 32.66 area. But after that, this is any pause, any pullback in trend looks like it may be, so you've got the bears saying, oh, well, look at this, Greg. We have all this resistance here. We tried back in September to break out, didn't work. And we tried again back in October, and it didn't work either, dude. And then we tried again in December, and hey, we didn't even get back to the line, right? Now we're trying again, right? Quadruple tops are like unicorns. They don't happen very often, right? But you get people, they see all this resistance here. All these orders are probably all taken out. So when this thing blows through here, this thing probably will break and fill this space of gap of price up to the 34, 35 area, Once we clear 133.50, we can see 34.35 quick in a hurry. And then after that, there's gapping space here, and so we 35.63 is our last resistance level there. But then, hey, go back here. This thing gapped down. So, I know you're saying wide ranging candle. Oh, it's a wide ranging candle, Greg. It's not a gap. Well, there's no real gaps in Forex. What they do is they take a crayon and they color it in. And they figured, well, since Forex is not centralized, that someone placed an order or filled somewhere. It could have been an airport, could have been, some guy on the street, but somebody filled that price or some broker, um, however, you try to buy somewhere in there and you get slipped really bad and you wonder why what happened. So there you go, 36.57. It could be what I'm looking at us getting back to and beyond. And this just syncs up with the going back to the U.S. dollar trade that the U.S. dollar index, where the index is just on fire. It's just totally just a massive piece of action there, where we're going to see big moves in the market, right? And so let's go ahead and keep on going. It looks like a dollar yen. I know people are asking about dollar yen, and here's the U.S. This is a dollar versus the yen. And again, it's a dollar story. It's a little sloppier because you've got risk off like Japan. Buy the yen because hey, there's risk. But it's also buy the dollar because it's risk. So you got two risk averse currencies. I'm just not a big fan of this currency, but the dollar pays a higher interest rate. Okay. And we can find that. We can go to our tool and go into our central bank rates, right? You can click that, and you can actually see what the interest rates are on these currencies. And you can see the United States is at 1.75. That's a high yielder. Look, UK is 0.75. Japan negative 0.10. Yeah, let me put my money in there and pay for them to hold my money, right? ECB 0. Woohoo! Sign me up for that one, right? Bank of Canada is a little bit better, 1.75, right? So you think, okay, maybe the dollar and CAD will slug it out, but what we're seeing is the United States, it's a range, right? So the dollar is beating up on the CAD, and the commodities are priced in U.S. dollars. If you haven't looked at your gas pump lately, the gas pump prices, I'm seeing $1.84 for gasoline. That's kind of telling you that global growth is slowing down and the dollar is strong because you can buy more oil with a stronger dollar, right? Stronger dollar means lower gas. So we can jump to oil too and see some really nice correlations, okay? Where you can actually start shorting oil again, shorting gasoline on the commodities market. All this stuff ties together, guys. Now we've got, so we can look at these interest rates here. We can go back to our chart. Okay, so we lost our moving average, but we can look at the USD JPY, and I'm looking for it to go higher based on the currency, the rate differential between the US dollar and the Japanese yen. However, if I'm looking at, we are kind of topping. It's a pretty ugly chart. I'd like to see some type of a pullback where I can get into this at a, we've got a bearish candle, like an outside day kind of candle, where the previous bullish candle's inside the body of this candle here. Usually that's bearish, right? So if this is bearish, we can just slap a fib on it and say, okay, well, how about this? We can maybe drop down to the 38% retracement, 109.37, maybe 109.15, right? We have a lower high, so we have a trend line, right? We can connect that lower high, and but we also have a higher low. We've got higher low here. We can connect these, so we got like a indecision triangle that's going to resolve itself. Several days from now. Get rid of this, right? So we've got this indecision triangle. Let's go back. And like I said, we're still in an uptrend. So higher swing highs, higher swing lows, but we have a lower high here. So we can see there's a little bit of a gap here at 109.15. So maybe we can see a pullback there, right? Like I said, I'm not a big fan of this, right? But we also could break, if we break above the high 110.04, then we have a shot maybe at 110.50 and 111, right? So that's the key area. If that bearish candle holds, and we continue down. So that's dollar yen. All right, let's keep going, keep this moving, and we look at USD CHF. Again, we're going over the majors, and I'll probably pick one of my my yen pairs like doing. Here's dollar Swiss. You can see dollar Swiss is formed a nice bottom at 96.20 January 16th, a double bottom 96.28 on February 3rd. That was my mommy's birthday. Happy birthday, mommy. And then we see support there coming in, and we can see prices probably going to come up from this area and keep on climbing, right? And maybe we get the next level of significant daily resistance comes in at 98.30, and we're at 97.70. That's about 60 pips. We break that, then this stair steps back up. We have the one spot 0024. Dollar is strong, guys. Remember, we started off with the dollar index, and the dollar story is dollar is strong. The Swiss, these guys have a negative 0.75% interest rate. I don't think anybody wants to really hold on to this and be charged to hold money. We also have some support down here in the 96.99 area. We broke that clearly, and we've got maybe a little bit of minor support there at 97.37, which are hidden. And so I think 98.30 is a nice shot to go. If we fail that area of 97.73 holds, and this thing decides to turn back down, then we could see a retest of 96.98, and then maybe further down to 96.15, right? So we're at a critical space there, because basically we're tagging this from the backside. We're tagging the support area from the backside right there, right? All right. So we've got, so we did Aussie, we did New Zealand, we did Kiwi, Pound, Euro. Okay, so that should take us care of the majors. Let's take a look at oil. I'm going to look at U.S. oil, the CFD there, and we can see, oh, this is a sled ride down. Come on now, like, whew. Oh, and we got almost like an abandoned baby right here, and that's a chart pattern. I didn't make that up, but we've got support coming in at the 50-55 area, right? And will it hold? Probably not. I see price heading back down to maybe 42 and some change, 42.40, right? 42.40 is where I'm looking at to go. We can see 42.40 come in play right there, right? We might get a little bit of a bounce here, right? And I'd be a seller of any bounce. We could bounce a little bit. Manic Monday, a bounce, but I'm looking for a bounce and a drop. So this looks. We had a double top, a bearish pattern right here, where price came up, and it didn't have enough strength to even come back to test this old high. So basically, we have a lower high, lower high, lower high, lower high. Okay. This is a high. This is lower than this one. This one's lower than this one. This one was up a little bit too. So it's kind of like, okay, right? Rejection from this trend line from these 2 points there. But I think ultimately 42.40 is a nice target. I think we break 42.40, and we do have some minor support coming in at 39.31. And if we break that, then ultimately I see a retest of the 25.92 area. I mean, guys, smart car has left the United States, right? Because you need like $5 a gallon gas to make that thing make sense, right? Um, so as gas goes down, the people are wanting smaller cars, are usually that kind of fades, right? Be a boom for airlines, especially like Southwest Airlines or any of the airlines that hedge their fuel. You know, then it's going to be a boon to travelers. Just so don't want to travel overseas. Then maybe domestic air travel should be very good, so you might be able to see the benefits of um, companies that actually, if you're looking at stocks, I know this is not a stock show, but if you are looking at any company that benefits from a stronger dollar, so that's dependent on like a commodity, like Starbucks. Hey, they import coffee beans from around the world. They can buy a whole bunch of coffee beans with U.S. dollars, right? So any of the, even some of any of the uh, stocks that require that do business, that have to buy things overseas, like raw materials, like mining or something like that. Um, you want to see that the strong dollar will benefit certain companies. And on the other hand, strong dollar could also hurt companies who are selling goods to these countries, or they can't afford it because the dollar is so expensive, right? Relative to their own currency. So I'm looking for, again, I'm bearish, bulls versus bears. Hey, you know what? I'm bearish on oil. Let's take a look at gold. Gold's probably going to get hammered too. But I'm just going to, let's look at the charts. We don't care what Greg says. We want to see what the charts say. Okay. And this is interesting, I mean, gold is like one of those Mad Max kind of end of the world kind of things. Like, the world ends. The society as we know it ends, is what I'm saying. Um, Nobody's gonna want paper with a picture of a dead guy in the front of it. They're gonna want gold. Okay, so sometimes when you see you know times of geopolitical unrest, war, famine, upheaval, revolution, rocket attacks, disease, pestilence, gold kind of rallies. It's like your bad news, kind of like, hey, the world's going into hell in a handbag, but I got gold. It's like, yeah, uh, not to make light of that, but but the U.S. dollar though pays interest, and you can buy goods that's convertible, and that's gold doesn't pay a dividend or a yield, um, so I'm looking at that, as the dollar continues to strengthen, because here is XAU versus USD. You can take gold versus maybe some of these other currencies which are weakening, and the gold may be kicking serious butt, right? So I'm looking for a blowout. If we blow out 1537, we blow out this trend line and blow out 1537. This thing comes down to 1451. I know people are like, Greg, I think you're wrong, dude. I mean, I'm bearish on gold, right? I mean, this was a full body green candle. Yeah, 1600 is going to 2000. The gold bugs are like, yeah. And then, oh crap. Let's do it again. Buy the dip. Oh crap. Buy the dip again. Right? So this is buy the dip crowd, and they're probably going to get smoked. Okay. And when they do, then we're probably going to see a collapse in gold, right? Email me if you don't like it. You're like, no, Greg, no, I'm going to buy more gold. Like, don't. You'll be sorry. This is my 2 pips worth, okay? I could be completely wrong. I've been wrong before. But this one I want to show you. XAU, AUD, right? Kind of similar pattern, gold's beating up on it. I mean, it's okay. XAU. So yeah, I would think that gold would, they're really similar. Okay, XAU and Euro. EUR. or is it gold euro? It's a euro gold. They're all kind of like doing the same, right? But I'm bearish on gold. I would think that maybe some of these other currencies would be weaker versus gold versus instead of the U.S. dollar, but that doesn't make any sense for this chart. Okay, so we did gold, we did silver, XAG. I mean, this is gold's this little little half cousin here, and you know what? This is an interesting chart. It's like we have like a flag pattern. I mean, $19 on silver is possible, right? I don't know what could be. I think one has more of an industrial purpose or something. I don't know, but this is interesting. I mean, given that the correlation between silver and gold, but I would need to see a break of the trend line. But if we don't break this lower trend line, this upper one looks. I mean, that's like that looks tasty. If it breaks, then we could probably see a retest of $19.60. Right? Okay, so let's do this XAG XAU. I don't know if they make that. What is that, Greg? Greg, what are you doing, man? I don't know. XAG XAU. Does it exist? So we got XAU, XAG. Ah, there you go. Gold, silver. Right? This is gold versus silver. Right? And yeah, this looks bearish, favoring silver. And I mean, I don't know anybody who trades this, but just putting them together seems like this rally in gold is like overdone. We would just need to be a break. I mean, I'm just digressing right now because I'm just fascinated by the metals. Um, so I mean, we need a break of the trend line for us to short this, but 3 drives up possible. Yeah. There's a lot, but there's gapping space here. This thing could actually come back and test the top of the range. So nix that. Okay. Anyway, I didn't mean to confuse you guys. SPX 500. Let's take a look at that. Forgot about our indices. Those are very important because ouchie wowie, right? Outside day candle. This is if you were an old bar chart guy from back in the day, I used to study bar charts and draw stuff out by hand on graph paper, right? And if you saw this candle engulf basically all this price action for the previous day, that was pretty bad, right? And then, when Steve Neeson brought candlesticks to America back in 1994, right? Rice traders were using these back in 1500, right? So we're just a little slow to the party here, but that's pretty bearish, right? In fact, I'd like to, we could see a major move in maybe back toward the 3220 area. That would be a pretty sizable drop, right? Just kind of a topping pattern. Yeah, or even like 3182. I'd be a buy. Definitely, this is an uptrend, and I don't mean gloom and doom on the S&P. I still like it going higher, maybe like 3,500, maybe 3,600. But I think it's overdone and it needs a reason to take a break, and this may be it. And if we have this kind of like this kind of like we're maybe at the top of some type of a rising range, it's time for it to make a little bit of a correction, right? So S&P 500 looking for that to kind of drop here. Let's go UK 100. Let's look at the FTSE. I think all the indices are kind of like looking the same here. Oh, that's SPX. Okay, can't look at any of those. Okay, so if you want, I'm gonna throw Bitcoin in there for you. Bitcoin is kind of like another kind of a fear currency too, because I mean we came right to a nice Fibonacci area here. You can see it. The 618 was tagged. Tag, you're it. 1, 2, 3. Knock 3 times on the ceiling if you want me. Twice on the pipe. Bink, bink if the answer is no. Well, here we go. Here's our, we're heading back up. Moving on up like George and Wheezy, people. Downward trend line broken. We're back above 10,000 on Bitcoin. All right. All you hodlers. I thought we were at like 17,000 on Bitcoin. Oh, there you go. I knew there was something missing here. Like, where is this? So we still got whiles to go to get back. If you're still holding on to it, congrats. But that was my target down back here when we topped out over here. But we came a nice bottoming pattern, and now right there, all right? So that's it, guys. I want to thank you guys for watching the video, and I hope that it helped you. And if it has, make sure you can email me at greg@elitetradersu.com, and then I'll put it back up on this PowerPoint here, right? I think you can. Hi, how you can reach me, right? Yeah. And what we're going to do is, we're going to use this one, right? Yeah. Yeah. You can go to www.elitetradersuniversity.com if you want to watch a free video on how to master the market, and 4 pillars to 6 figures is there. In fact, you can even go, I'm going to change this because it's my market heat map. You can go to mymarketheatmap.com, www.mymarketheatmap. If you want to get the My Market Heat Map and get all those bonuses and tools that I use to analyze the market, right? And what you want to do, and then you can join the VIP group there too, but just email me, greg@elitetradersu.com, elitetradersu.com. I'd love to hear from you. If you have any comments or any questions, I'm here to help you in your trading and to give you information that will help you make more pips and be more successful. And if you are interested in mentoring opportunities, email me as well. I'd love to talk to you, love to chat, and love to hear what you have to say and see how this has helped you. And so I look forward to, I have my email down there, right? Okay. So let me put this. I'm going to give you a free masterclass, guys. If you want a free masterclass, you can sign up here at www.4pillars. Come on, PL. It's late. 4 pillars to 6 figures. Figures, right? .com, right? 4pillars to 6 figures.com, and you can register for a free masterclass. And I'm actually doing in the middle of it, and you gotta watch the middle to the end. Or kind of like I'm actually trading my live account, and you can actually see how I enter the market, and you can see how those 4 pillars come together in placing the trade. Also, you hear some success stories, and also about the formerly is my market, and my Forex heat map is my market heat map. So. Again, I look forward to serving you and helping you succeed, and I'm so thankful for you. Thank you for watching the video, and I wish you much success in your trading. And remember, why buy and hold when you can pip and run, and you can crank it out the Forex cash machine. Talk to you soon. Cheers. Bye. Peace.
If you want to learn more about profiting from the Forex market, go to www.forexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.